Good afternoon, Scott Redler, T3 Live. Welcome to today's recap. So it feels like this is the third or fourth time we've had this big gap up where if you tried to trade the indices, you had no success, but there was a lot of movement intraday depending on what stock you're trading. And we've been trying to outline the best moving stocks. It's been a little different, obviously, this year, where it seems as though all the stocks that have been heavily shorted that got really crushed last year have been the ones that have been the best intraday trading vehicles, or the ones that have been getting followed through, whereas some of the strongest stocks have been taking time to rebase, develop new chart patterns before making new moves. But for us, it's fine because we can switch gears, we could look around for the best stocks, best charts, and but the real, I would say, the real traders or market participants that have been having some success have been the ones that have been holding 8 to 12 positions that they like, and then recently having a bit of a hedge around it just to feel comfortable, and then adding and taking off intraday and managing your positions. I've been trying to do this since December 20th. Every few months the composure changes. Sometimes I try and be net long and stay that way, and then I stay net long with the hedge, and then all of a sudden the complexion changes. I pull it back, and then I do more of a sniper approach. Then if we're in a bearish tape, I like to be net short, adding and taking off positions as the market trades, and then and then putting stuff on when we're oversold. And the game always changes. Right now, I would say the macro trend is still intact, but I do see a small ascending channel that's developing that could be testy if it resolves to the downside. So I want to just show you on the charts here. If you take a quick look, we'll do it with the spiders, you will see market's been acting very well. If you look at the macro trend, and if you look at in the spiders here, you could draw two different charts. Here's where we had the data taking notice. This was when we put in the low of the year, that major reversal. And then I'm not even going to get to the whole thing, but here's the low, and another low. Okay, ever since we broke this downtrend, we've been riding this nice ascending channel to the upside. Okay, every time we seem to get to the upper end, we can't really punch through, but then we also are holding the lower end. So within this move, stocks are acting really well. But unfortunately, the same way when you get a descending channel like this, right, they usually resolve to the upside. An ascending channel typically resolves to the downside. But it could stay in this channel for as long as it wants. But if it does not hold, like you saw here on Friday, or a few different times once you had that gap up, you could get some corrective type action, and you could even see a move at some particular point to put another higher low in, to put in the January higher low. So for short-term traders, this would be a little bit hard to handle, but for the macro investor who has been rewarded for buying these dips, it's still fine. We're not in a rock star environment. There's still a lot of problems in Europe. There's still a lot of headlines we have to get through as far as a lot more auctions. We have to figure out whether Greece is going to really be a hard default. You have the debt ceiling debate. You have just there's a ton of headwinds still in front of us. So there's no reason for this market just to blast off. I think we have to not say be lucky, or we have to, what's the word? Appreciative of the action that we've had for the last month, because if you've been long, you've been able to get rewarded, and you've actually been able to hold without any huge gap downs. I know we've had a few 10, 12 handles, but if you remember last year, we had a handle, a 24 handle gap downs, 30 handle gap downs. So, if you've been long, then you had, some stomach wrenching type action. This year has been much more methodical. So until that changes, we'll stay the course. So if you go back to, this ascending channel, I would say right here, as long as we, don't close, just say below 127, I'd say 128 to 2750 would be an area that, would somewhat not change the trend, but just, give a little bit of a brush back to perhaps some corrective sideways downward type of action. If you look at the S&P, the SPX, you'll see it's a little bit more pronounced here, where you have, these lows intact. We broke above this little downtrend. We broke above the October high, which is good. But ever since we broke this downtrend, we've been hovering along, which is great. I love to hover. But if we were to break this, okay, if you take a closer look here, break this little ascending channel, you could see a bit of a move to the downside. Now, I don't think we fall apart, but something that shakes the tree up like we had here, or we had here, we haven't really had that yet. So just don't fall asleep behind the wheel is all I'm trying to say. And if you take a quick look at the monthly chart, of the S&P, you'll see that, no, let's not even go, let's go to the weekly. You could see it here also. Let's go back to the daily. I just want to show you, there's some chart that I was looking at that showed, I guess you could see it a little bit here, where this line, this downtrend from here, it's gonna be a little tough to get through. That's about where we are, right? So this is the March highs, and here is the July highs, and we're coming into that. So if you look at where we came from to here, this is just not an area to go nuts on. That's all I'm saying, is I'm trying to be a little prudent. I've been trying to, everyone's saying, Redler, I haven't seen you long 8, 12, 15 positions for over a month in a long time. Well, I'm trying to grow, but at this particular point, I don't want to be caught holding the bag. So coming into this area, we could still pull in and go to 1270 and be fine. So I just want everyone to realize that, don't just, think that it's off to the races when we could easily get a little bit of pressure. So just be hedged and just know where we're at. As far as, what was that? Setups and whatnot, there's been a lot of them. At this point, I don't see anything that I love. Every few days I've been coming in, I've been loving something. If you look at some charts real quickly, like Apple, real quickly on the daily chart, nice move today. Unfortunately, you had a little bit of a pull in, but overall, remember I said, I think we wake up this week. Well, we just broke above this small descending trend line, and now you have the recent highs here, which it seems as if it would be nice if they take them out before earnings, because we'll get a nice little trade above here, but we shall see. I'm back long Apple. I sold, I think, last week into these highs, and I didn't even trade it once last week, which is big for me. And then today, got back involved. Amazon also woke up a little bit. Nothing, no blockbuster type move, but also Amazon cleared this little area. It's coming from the lower end, so it's really not anything worthwhile as far as, technically. But here, I guess you could say it still broke above this recent downtrend, holding here. It could continue higher, maybe 190 or so. Netflix was a little choppy today. All in all, not enough volume or not enough time to absorb this big move. If you guys remember, the big trade a week or so ago is when it cleared this 74 area, and then when it cleared this 81, 82, and now I think it's holding up very well up here. It did close off the highs, so I would be a little lighter. At some point, we can get through this 99, but it's going to have to absorb what's been a big move already. Today, though, the action was in GMCR. I missed this one today. A lot of guys had it on the radar from the morning call when we did the trash for treasures sequence, and we did it off the charts. You had your reversal here where people thought it was a short. They got trapped. This was your red dog reversal. You had a 2-day move. It held higher here, and then today you got rewarded. I think Sperling still likes it. It took the moving average. It could continue higher. Nice little trade there. MCP not really doing much. Today was a little different as far as the banks. If you recall, we had JP Morgan earnings. I outlined 35, 35, 20 and said it'd be good if we hold that area. And then today, Citigroup was really not good at all, and it couldn't find a bounce the entire day. So, and then you had JP Morgan break Friday's low. So right there, a little questionable action. The first scenario, I thought it was fine. Big move in just say JP Morgan from 32 to 37. So pulling on earnings, not bad. But then to trade below Friday's low and not build a new pivot, I think that's a little troublesome. But we'll see how that how that builds or what transpires here. This is the high from October. This is the day that I sold my JP Morgan, saying I'm not taking it into earnings. We were holding it from this area before the new year started, and then it broke this. It broke Friday's low. It's still holding okay. I guess I'd like to see overall it hold this 34 area, which is the gap up back from the beginning of the year. Look, just to show you like an ascending channel. Here is somewhat of like an ascending channel, which it followed. Then it broke below it on earnings, and now it's to the right of it. I guess you want to come back a little bit further here. This, I think, will be very interesting coming in to this 34. How does it handle this 33.80, 34 area? This will be probably the rubber match for the Bulls and the Bears for JP Morgan. Citigroup really got pummeled today. This one actually was above the recent resistance. Actually, no, it never made it as high as the October highs. And then today, didn't even think about coming off the lows the way JP Morgan did. So we'll see how that acts tomorrow. Goldman Sachs also has its earnings tomorrow, so we'll see what it does. It had a big reversal today. This one also, just everyone kind of knows I like to trade it from time to time. This is when I started building into it, into this little flag, had a nice little move, going into JP Morgan earnings, I did the same thing. I said, I'm not holding this thing into earnings. It could have gapped up, but I had enough. So at this point, it's still, let's see. I guess you could say, same type of scenario, but it'll all change tomorrow once the earnings are out. I think a lot of people are thinking short because of what happened with Citi and JP Morgan. It'll be interesting if it goes the other way because the market likes to get everyone fooled as much as possible. As far as the ags, POT, we went long on Friday, added above 44. Today, gapped up about $1. Wasn't really much of a trade. I took most of it off into the strength. I'm still holding some. I'm going to wait for a new setup. Probably saw the same type of action in a lot of the other ags. CF, nice move. Still inside day, looks good. Pot, also, nice move. Still can continue. Traded versus your time frame. Mosaic, it's been lagging. Still not much action here, to speak of yet. Monsanto, still hanging around. So the ags still look good. I would say the OAHs lagging a bit. I don't love the action here in the OAHs. I'm long from right in, I think, this area. I didn't add as I thought, because it did pre-market, but it's still really being controlled by this downtrend. This is the downtrend that's been intact here. Short-term wise, I would say it kind of broke its ascending channel, right? We talked about ascending channels. This was a nice move to the resistance to this downtrend, and now it broke below it. So I would say if you don't want to be involved in this thing longer term, I'm going to stay involved, until I would say it breaks this or you see a composure change. I would say use the 115.50 area, like this low. As long as it stays above this, I think it's fine. Just needs more time. But if it starts breaking below the Friday low, you could see some more corrective action. So it all depends on your time frame. Overall, this descending channel is still in check. It just might need a little bit more power before it gets going, and obviously it's going to need the market for that. I don't like the way Halliburton is trading. I don't like the way Schlumberger is trading. This is gross, not participating at all. I wonder what it's for, indicating here. If you take even more of a macro approach, it's really like, everyone loves this stock, but it's below the moving averages. It's near support. I guess we'll see what happens at earnings time, but to me, this is technically not acting well at all here. So we'll see what happens there. RIM was a great trade today. Every day it seems like something happens that if you're quick and you're prepared, you know how to act. Sperling, he's been incubating this RIM trade for a while, watching it in the 16s, watching it. All of a sudden we saw that inside market start to speed up, something changed. It was a great long around 1670, 1680. I know it closed off the highs, but it was a nice trade. You look here, this was the level. You had two levels in RIM. One, guys were watching, was right here when it broke above this 1560, and then people wanted to see it get above Friday's high, and look at this trade. Nice trade here. As far as this uptrend or this new uptrend that it's in, to keep riding it until it changes. You have some room till here, a lot of different rumors, whatnot out there. I don't care what it is. You look at the volume that came in today, you go to your basic studies, you go to your volume. Okay, nice volume today. So we'll see what happens. I remember the last time we did this, there was takeover rumors galore, and we wound up riding it from like 22 on as high as 34. Every time it didn't get taken over, it opened down and it just continued. So let's see what happens here. It's been a nice room off the lows, or a nice move off the lows. I think it can continue a little bit more, and then maybe you do get a takeover, but I doubt it's soon. But if it is, all the more power. But technically, we were watching 1670. It happened. As far as gold, let's take a quick look here. Still not great. If you remember, I was on Street Signs with B. Sullivan. This was the day we set to cover. Okay, I did not expect to move through this resistance, but I really don't care. I haven't been trading it, but again, nice prudent cover down here. Some did flip long for an easy type trade, easy snapback, and now this is just a mess. That to me is just no reason to be in there, no reason to be long. And if you want to go with this whole ascending channel type of strategy, it also from this area is trying to stay within it. So just keep that in mind as it moves forward. What else were people talking about? Where else was there action today? Actually, MCP just went up and failed. I guess at this area, just don't really overtrade it. It's trying to hold above this little pivot. If it doesn't hold above that, get out. I actually sold mine today. It's not really acting well to be honest with you. Let's see, the last thing I wanted to talk about, there was something else I wanted to get into. Oh, Shield. Shield. You know, a little bit of a short squeeze, nice trade into the gap. Some guys were all over it in the chat room. You know, nice little technical point. And once it broke above, you had a nice trade. Whether it was, you know, big volume or whether it was rumors of a takeover, it doesn't matter. Whenever you have a nice pattern and you're building some volume and you're coming into a gap, most gaps like to get filled, or at least a portion of them, and you had a big gap all the way above 40, so congrats to you guys that caught that cash flow trade. So all in all, the action isn't tremendous. It's a bit lethargic, but there is a lot to do. There's a lot of intraday action. We haven't had too many big brushback pitches where if you were long overnight, you came in and you were really worried. You know, we've been able to trade off the lows like we did on Friday. We've traded off the lows a few times where the dips have been viable. So until that changes, let's just stay the course. And as we continue to extend, just don't be in a tier 2 or a tier 3. Pull it back to a tier 1 and then put on most of your size intraday and limit your risk so you're not throwing a curveball where all of a sudden you give back, you know, some of your hard work, because I think a lot of guys have started off with a great January. We went into the new year with some nice momentum. The last 10 days of the year were solid. I think as far as guys who are trading with me, it's been, you know, since December 20th, I think maybe I've had 1 or 2 down days tops. So it just shows you how once you start building consistency, then you start building the confidence, and then when you start building the confidence, your numbers start to get bigger. So all it is a process to get yourself feeling good, to put your months together, which will then add up your year. So all in all, we'll figure it out. There's going to be a lot of headlines, a lot of action. I feel like earnings season really didn't even start yet. We have Google, we have Amazon, we have Apple, we have Microsoft. We have so many big earnings coming out. Goldman tomorrow. You haven't missed anything. Just make sure you know when the companies that you're trading are reporting, and just know what tier you should be, and don't fall asleep behind the wheel, because I think some guys got a little overly excited today and they got a little caught up instead of being properly hedged. This is Scott Redler, T3 Live, the recap. See you at the morning call. Have a good night. Alex is back tomorrow.